Has Brexit damaged London's financial future?
Hello, and welcome to the Mark and Pete Show. Well, new Brexit rules have come into force, which will affect the financial industry. Trading shares in all areas of the communities across Europe, including the United Kingdom, are now beginning to see a new trend. What does this mean? Well, perhaps where some of the centres that we once knew as being the leading trading centres might need to sort of bear this in mind. The floodgates are open. And here's a thought. Damn, and Amsterdam, the Dutch have ousted the big city. London has financially come undone, and there's little left in the kitty. Oh, Clergyman Pete, can you believe it? Amsterdam has ousted London as the largest financial trading centre in Europe. Well, what say you about the future of the city?
Yes, it's interesting, isn't it, that you can measure the success of a financial centre in different ways. Now, this, I believe, correct me if I'm right or wrong, is a story of Amsterdam trading in more stocks and shares.
Oh, yeah.
That's really what it's saying. So it's getting, effectively more trade. It'd be like comparing, say, some supermarkets, and this one has sold more goods, but it's also taken in more supplies as well because it's selling more. So it's a question of throughput, I suppose, is another way of putting it. The shares and trades going through that particular hub that Amsterdam's taken over. So what I would say about it is it's interesting that this should happen. London has been preeminent for so long, but the question I'm saying is, that I have is, how temporary is this? This could be just something that's really very temporary. Because, of course, it comes just after the effects of Brexit come into place, from the start of this year, and it could just be due to changes in regulations,
Yes,
pushing people to trade there, which could be a temporary effect. It could be permanent. I'm not so sure at the moment that London has lost out in the long term.
well, let's see. So let's get to the facts. So what we're saying here is that about 9.2 billion euros, which is about 8.1 billion pounds worth of shares.
I thought you were going to say it's about £8.50.
Well, I think that's pretty much
that's how much euros were
in terms of profit.
Yes,
so
yeah.
about that will traded on Amsterdam Exchange each day
Sure,
against
yes.
the 8.6 billion
Yeah.
in London. Now, what this means is, following the new Brexit rules, EU-based banks wanting to buy European shares currently cannot trade via London, meaning a loss of fees for the city firms. Now, the Bank of England chief, Andrew Bailey, who's relatively new to the role, well, congratulations, good timing to come into a role like that, has warned that the EU not to cut off London. Now, he believes that there were signs that the EU planned to cut off the UK from its financial markets. Now, of course, this is all a bit of a hoo-ha around the United Kingdom leaving the big club, yes, the European club, which it did, of course, very recently. So as far as he's concerned, he has thought that actually the United Kingdom will still be okay in the long term. But of course, many people are worried that actually the United Kingdom has been so reliant on the financial industries, and including, of course, financial trading of shares, that actually this could affect the United Kingdom long term. So I think what we really got to get to is that there will be a levelling out. And here's a point. Now, I know we don't really want to play too much on COVID because it's affected many people throughout the last year. And the one area that many people think that actually London will be in a better position, as well as the United Kingdom, is because of the success of the rollout of the vaccine. Whereas the Netherlands has not had such a good effective rollout of the vaccine. And so it's believed that actually, ironically, that trade could boost very much quicker in the United Kingdom, including London, as opposed to those centres that we've referenced. And that would include places like Germany and France and many others. So the question really is, who's perhaps shuffling a little bit more? Maybe in the short term, you might argue that Boris Johnson and Rishi Sunak, the Chancellor of the Exchequer in the United Kingdom, might be thinking, I wonder what's going to be in our next budget and what we need to do short term. But it's the long game. Will London be in a better place when it starts to trade with other communities, whether that be in Asia or whether that be in America? Some people actually think that now that we have a new president, President Joe Biden now.
Of the United States, yeah.
Of the United States land, definitely is perhaps probably long term going to be in our favour in the United Kingdom. But the jury's still out, and I still think that what I would say is this. When people look at tariffs, if tariffs are part of the equation, that's certainly going to affect countries like Germany. Germany being a big manufacturing base, relies on its manufacturing industries. If tariffs are too high, then that's not going to be good for them. Whereas in the service-based industries, perhaps whether it be about technology, whether it be about finance, retail, and many other things, trading certainly online could be something that, as we see the trend moving away more from the high street to the virtual world, this could actually play better for the United Kingdom. But I would say this: what we're really seeing is a bit of sort of a tit for tat, shall we say, because the United Kingdom left the EU, and I sort of really feel here that what we're seeing is perhaps a bit of game playing. So, Clergyman Pete, I ask you. Although we probably are quite surprised that Amsterdam has temporarily, perhaps, that's open for debate, temporarily become the biggest trading centre, I can't see it happening long term, and I think it's partly because of the power of some of the banks that we have in the United Kingdom, and the liquidity that they have, the power they have with their investments, not just in Europe but around the world. So, do you believe that in a year's time, Amsterdam will still be the largest trading centre?
Well, no. My prediction would be that it's increase in the average daily trading, which is what we were talking about earlier, in Amsterdam, was due to due temporarily to the changes that are taking place from leaving the EU. But those aren't the only changes that will happen, of course, because now the UK can take its own decision. The government in Westminster can take a view on trading regulations. They could choose to open up to different markets around the world, which you were discussing earlier. I think I'm right in saying that they've already done that with allowing trading in Swiss stocks. I think that's the case. So there's already been a change that has meant more trade in London. So I think this is what I think. I think that the greater flexibility that comes from leaving the EU rather, will mean that London actually leaps ahead. And I think that because of the nature of the business, it's not like you've got to tool up new factories in order to make changes. Like if you're making something physical, what you're talking about is a service sector. So the changes can happen, almost overnight. They can happen very quickly.
Yes.
So I would say, if you ask me, by this time next year, I would say not only would London have regained its place at the top of being the top share trading centre in Europe, I would say that it would have leapt ahead of where it was before. I can see this as long as the UK government does make wise decisions, which, okay, they don't always do, but I think in this area they are more likely to, because it's more of a clear-cut decision that a bit more flexibility, allowing trading in more markets, etc., broadening your horizons, is going to result in better financial success, and therefore, better pensions, etc.
Well,
if you're looking at it's getting more votes, it's just a clear-cut decision. It's a win-win situation for politicians.
yes. Well, pensions clearly are key, certainly from a consumer's perspective. I want to go back to Mr. Bailey. He's
Yes.
quite key to this, particularly with his insights on regulation. Now, regulation is something that no financial institute will be unfamiliar with. But what he is basically saying is that the UK rules, that particularly post-Brexit, would not necessarily mean that there would be a sudden deregulation that was potentially on the card. So what he was saying is let me be clear, this is him speaking, none of this means that the UK should or will create a low regulation, high risk, anything goes financial centre and system. Very good. It's good to hear, especially, and I think this is where my view is as a business person, we've seen financial institutes fall foul of bad practice.
Sure, yeah.
We've seen not just individuals, but departments and whole institutes actually fall foul of regulation. Now, there's a balance here because we don't want too much red tape. We talked about that in a recent Margaret Pete podcast about over-regulations and red tape. We don't want that.
No.
But what we do want is we want in everyone's interest to ensure that banks are financially robust. And certainly in the United Kingdom, there's been lots of measures behind the scenes to ensure that they are robust to weather the financial storms. Now, we're going through one, albeit that we might call sort of like the COVID impact. That has consequences on everyone, but particularly in business. Mr. Bailey mentioned that undoubtedly we will continue as the world's leading trading centre long term, and this idea that we are a financial centre. Now, there is a reason for this. It's not just about the trading mechanism. It's also about the skill sets. Now, one of the things that was called out in the last year was an exodus of skill sets, meaning that traders, analysts, managers, people who had expert knowledge within the financial sector. So as I'm sure that many of our listeners will know, it's not just simply about chucking money backwards and forwards. It's a lot more scientific than that, folks, as we know. And some of those specialist skill sets, mathematicians, scientists who work within the financial industry, were predicted to leave the United Kingdom and go elsewhere, and particularly to mainland Europe. Some people cited Amsterdam, Germany, France, and many other places. And that was certainly a concern. But what Mr. Bailey pointed out is that he said up to 7,000 financial jobs had so far been relocated from London to rival centres in the EU. And that's well down from what was predicted as 50,000. So essentially, the United Kingdom has lost talent, but it hasn't lost all of its talent. Essentially, it's an adjustment. And I think that this is really key because one of the things that the United Kingdom has done, and I think where it has been successful, is being able to retain its knowledge base and its skill sets. Now, it has been impacted. Nobody's saying that it hasn't. Even Mr. Bailey acknowledges that. But I think where I think there is some hope and optimism is that let's say that in a year's time, when perhaps COVID is much more manageable, we get back to some kind of normal and consistent way of trading, whether that be that certain industries will level out, like the retail industry or the manufacturing industry, etc., which has been impacted. What you'll see is that the knowledge base where you need to draw upon the skills, the analytical capabilities, will be key. And if you don't have that, and I'm not saying that EU doesn't have it, it does, but it doesn't have the same power base that the United Kingdom does. And so maybe there is a little bit of optimism there. So at this moment in time, I would say that yes, it's clearly a change of trend, but I wouldn't say that necessarily, should we say, if we think of it from a sporting terms, it's only half time, folks, and maybe Amsterdam is winning 1-0 at the moment. But I could see that maybe the United Kingdom might win 4 or 5-1 by the end of the game.
Yeah, and I suppose it's worth noting that things do change with
Oh yeah.
regulation, with innovations in ways of operating, things that we can't foresee because the changes that are coming down the line in the future. I mean, in the middle of the 80s, mid 80s rather, the City of London really started to take off, didn't it? It was that sort of
Yes.
time. But before that, it was in competition with different financial centres, and it has been going back through history, and so there could be a change, but we here at Margaby just don't see that change happening now. In fact, we see London as being stronger, opening up to new markets, as I was saying, and as you were saying, keeping a strong regulatory principle such that you don't have the mad investments which was so loose, with the subprime markets of the big problems earlier early at the end of last century, I should say. We no. Am I getting confused now? Earlier this century, so it's being a real. It's not that as simple as to say, right. London has always been in that position. It's for a long, long time. London has been seen as a great financial centre, and it's been the greatest in London. But if you go the greatest in Europe, if you go back long enough, Amsterdam was a big financial centre. Paris was a big financial centre, bigger than London, and so it could change again. But we're saying, not yet, not now, not today.
Yes. Well, and again, the other thing as well, which is an interesting one, and then this is a slightly different take on it, but to add some context, is that businesses that we see, and we've been talking about the financial industries, well, the financial services industries invest in business, and different businesses, different sectors, and we're still seeing the game unfold in the sense that, particularly retail, we know that that's still heavily much impacted by COVID-19, and I think that you will see that perhaps there will be some recovery on the high street when people go back. And there's a lot more, issues over the shutdown. Will the shutdown continue in certain parts of Europe or the United Kingdom? But it's not going to go on for decades. I know that's a bold prediction, Clergyman Pete, but I'm going to suggest that it will disappear. We will get back to some ability to be able to go into supermarkets or should we say, non-essential stores, albeit they're all essential when it comes to business. But I think that the key is that financial services industries are holding back in terms of where the dollar goes, where the euro goes, where the pound goes. Yeah. And if you have turbulence, seeing through the fog of uncertainty is a tricky game at this moment in time. Yeah. And many analysts will say it's not an easy thing to predict where you put your money. Many businesses have tried to turn to banks to get some kind of funding to keep them going. And the banks, and you've got to look at it from their perspective, are thinking, where is actually the long term? In the long term, which are those industries who will survive? And so whilst I know there are many people, and we'll open up certainly at the end of the show to invite our listeners to certainly contribute here on this subject. Yeah, sure. But the reason I think that the capital, the City of London, does so well is it because he understands both the small, medium, and large-based businesses. A huge percentage of the annual turnover of the city comes from small to medium large-based industries where they invest and they grow businesses. And it's not just obviously UK homegrown industries. It's investment in Europe and investment in America and investment in Asia and other places. In fact, actually, even our esteemed leader, Boris Johnson, has openly talked about the idea. Yeah. Yes, yeah. Big fans. Has certainly talked about that many a time pre-COVID as well as during COVID, about how the United Kingdom can be a centre of trade and to work in different ways whilst maintaining standards. And I think that's the key. That's the crucial thing. So to close out, listeners, so the City of London generates around £135 billion in business annually, and that's with financial institutes earning big fees from trading stocks and shares. But whilst we've seen that actually that has been cut from EU markets, certainly in 2021, maybe things are going to change. What's your view from a business perspective? We'd love to hear from you. Do you feel that maybe now the tide is turning towards Europe, or maybe you feel actually this is just a blip? Why not log on to markandpete.com and let us know your thoughts? Well, join us again next time for more topical topics with Clergyman Pete and Businessman Mark.